60 days ago, I knew absolutely nothing about investing. Not stocks, not index funds, not retirement accounts, nothing. Today I have a growing investment portfolio, automated contributions, and genuine confidence in what I am doing. This did not require a finance degree, thousands of dollars to start, or years of study. It required 60 focused days following a simple step-by-step method that anyone can replicate starting today. If investing feels overwhelming, if you have opened articles about stocks and closed them confused, if you know you should be investing but have no idea where to start or what to do first, you are exactly where I was 60 days ago. The overwhelm is not your fault. Financial education is deliberately made complex to sell courses and services, but starting does not require complexity. It requires a clear sequence of simple action. In this video, I am going to walk you through the exact 60-day method I use. Week 1 and 2, education only, no money yet. Week 3 and 4, account setup and first small investment. Week 5 through 8, automation and building momentum. And the single psychological shift in week 6 that completely removed the fear of losing money and made continuing feel natural instead of stressful. Before the 60-day method, let me explain why most beginners never actually start investing despite wanting to. It is not laziness. It is decision paralysis caused by too many options and unclear priorities. Should you learn about individual stocks first? Index funds? REITs? Bonds? Crypto? There are thousands of assets, dozens of account types, hundreds of strategies. When everything seems important, nothing feels like the right first step. Paralysis wins. Years pass, nothing happens. This method removes paralysis by giving you one thing to focus on each week. You are never overwhelmed because you never see more than 1 week ahead. Each week has one clear objective: complete it and move to the next. By day 60, you have a functioning investment system without ever feeling lost. Weeks 1 and 2, education only, no money, no accounts, just learning. Your single goal for these 2 weeks is understanding 3 concepts. Concept 1, what an index fund is and why it exists. An index fund is a basket of many companies bought with one purchase. It spreads risk automatically. Concept 2, what the S&P 500 represents. The 500 largest U.S. companies. When you buy an S&P 500 fund, you own a piece of all 500. Concept 3, what dollar cost averaging means. Investing the same amount regularly regardless of price. This removes the pressure of timing. These 3 concepts are the foundation. You do not need to understand everything about investing. You need to understand these 3 things deeply. Spend week 1 reading articles and watching videos only about index funds, the S&P 500, and dollar cost averaging. Ignore everything else. Week 2, write out the 3 concepts in your own words, as if explaining them to someone who knows nothing. If you can explain them clearly, you understand them well enough to start. Weeks 3 and 4, accounts and action. Week 3 goal, open a brokerage account. 3 good options for beginners: Fidelity, Charles Schwab, Vanguard. All free, all beginner friendly. Pick one. The account opening process takes about 15 minutes. You will need your social security number, bank account information, and employment details. Do not overthink which broker to choose. They are all functionally similar for beginners. Just pick one and complete the application. Week 4 goal, make your first investment. Not a large amount, not your entire savings, a small, comfortable amount. For me, it was $100. The purpose of this first investment is not returns. It is proof. Proof that you can do this. Proof that it is not as scary as it seemed. You are going to buy 1 share or fractional shares of an S&P 500 index fund. The 3 main options are VOO, FZROX, or VFIAX. Any of these 3 works. Choose one. Buy it. You are now an investor. Weeks 5 through 8, automation and momentum building. Week 5 goal, set up automatic monthly investing. This is the most important week of the entire 60 days because automation is what makes investing sustainable. Go into your brokerage account setting. Set up an automatic transfer from your bank account to your brokerage on the same day your paycheck arrives. Set up an automatic purchase of your chosen index fund with that transferred money. Start with whatever amount feels uncomfortable but achievable. For me, it was $200 per month. The amount matters less than the automation. Once this is set, investing happens without decisions, without motivation, without remembering. Weeks 6, 7, and 8, you do nothing except let the automation work. Check your account once per week maximum. Watch the shares accumulate. Resist the urge to constantly check prices. Your only job during these 3 weeks is building the habit of not interfering. Automation works best when left alone. Week 6 is when the psychological shift happened for me. And this is the shift I promised earlier that removed the fear of losing money. Here it is. I stopped thinking about my portfolio as money I might lose and started thinking about it as shares I was accumulating. When you focus on dollar value, every market drop feels like a loss. When you focus on share count, every market drop means your next automatic purchase buys more shares for the same money. This reframe is everything. In week 6, my portfolio dropped about 8% due to normal market move. If I was focused on dollars, that would have felt like losing money. But I was focused on shares. My automatic purchase that week bought more shares than the week before because prices were lower. I was excited about the drop instead of scared by it. That is the shift. From fearing drops to welcoming them as buying opportunities. This shift makes long-term investing feel natural instead of stressful. Here's where I stood on day 60. Total invested over 60 days, $400 across 2 months of automated investing, plus the initial $100 manual investment. Portfolio value on day 60, $431. Gain of $31. That is a 7.8% return in 60 days. Small in absolute terms, meaningful as proof. More importantly, the system was built and running. Automation continuing, fear removed, confidence present, knowledge clear. The 60 days were not about getting rich. They were about becoming an investor. By day 60, I understood what I was doing, why I was doing it, and how to continue indefinitely. That is worth far more than any short-term gain. After day 60, the method is simple. You continue the automation and ignore the noise. Months 3 through 12, your portfolio grows, not in straight lines. Some months up, some months down. But the automation keeps buying regardless. The share count keeps increasing. Your confidence strengthens with each month that passes. By month 12, you will have invested about $2,500. Your portfolio value will depend entirely on market performance during that year. But more importantly, the habit is permanent. Investing is no longer something you think about doing. It is something that happens automatically as part of your financial life. By year 2, by year 5, by year 10, the compounding accelerates. The 60-day method is not a sprint to wealth. It is the foundation that allows decades of growth to work undisturbed. The most common objection is, I cannot afford to invest right now. And I understand that feeling. But here's the truth. You do not start by investing large amounts. You start by proving you can invest at all. My first investment was $100. My ongoing automation started at $200 per month. If that is too much for you right now, start with $50 once, then automate $25 per month. The amount is not the point in the first 60 days. The proof is the point. Once you prove you can do this, increasing the amount becomes easier as your income grows or expenses decrease. Many people delay for years waiting to afford large investment. Meanwhile, those who started small have been accumulating shares the entire time. Small and started beats large and delayed. Every time. Here is your day 1 action. Not week 1. Day 1. Today. Right now. Write down these 3 concepts you need to learn. Index funds, S&P 500, dollar cost averaging. Spend 30 minutes today reading 1 article or watching 1 video about index funds only. That is your entire day 1 goal. 30 minutes, 1 concept. By day 7, you will understand all 3 concepts. By day 30, you will have an account open. By day 60, you will be an investor with an automated system. The 60 days start today, or they do not start at all. Comment below. Are you currently investing or still on the sidelines? No judgment, just honesty. Let us see where everyone is starting from.